Welcome back to Eco Wealth Lab.
Great to be back.
You know that feeling when you're trying to explain the latest crypto craziness to someone and their eyes just, well, they just glaze over?
Oh, definitely. Happens all the time.
Yeah, us too. Look, the digital asset world moves faster than a caffeinated cheetah, and the last 24 hours, absolutely packed.
For sure.
So we're here to make sense of all that mayhem. Pull out the golden nuggets you actually need to know for your portfolio.
Exactly. It can feel like you need some kind of secret decoder ring just to keep up.
Mm-hmm.
And our mission here really is to be that decoder ring. Cut through the hype, deliver the insights that truly matter for your financial journey in this whole space.
And speaking of secret weapons, are you, maybe, just maybe, tired of being the least crypto-savvy person at the dinner table?
We've all been there.
Do you dream of just casually dropping some blockchain knowledge that actually impresses your friends? Well, consider this your cheat sheet, your path to becoming the crypto whisperer of your social circle.
Love it.
So go on, hit that subscribe button. Share this deep dive. Think of it as your personal level up in the game of digital finance.
Do it.
Okay, let's actually dive into what's been shaking in the crypto world. Where do we start?
Let's kick off with Metaplanet. A pretty significant move from them.
Okay.
They've just snapped up another 555 Bitcoin.
Wow, 555. How much did that set them back?
A hefty sum. $53.4 million.
Okay. And wasn't there something about their total holdings now?
Yeah, what's really interesting, maybe a bit symbolic, is this pushes their total Bitcoin holdings to exactly 5,555 BTC.
Huh. 5,555. That's quite the statement. A serious commitment to that whole digital gold idea.
Absolutely. And to fund this latest buy, they actually issued $25 million in new bonds.
Using debt to buy Bitcoin. Interesting.
And there's more. Metaplanet also announced plans for U.S. expansion. They're eyeing Miami as a key location.
Right. So what does all this tell us? A publicly traded company, buying more BTC, funding it with bonds, expanding.
Well, Metaplanet's continued pretty aggressive accumulation of Bitcoin, especially financing it this way. It really suggests a strategic bet. A bet on Bitcoin's role as, like, a treasury reserve asset.
Sort of like the MicroStrategy playbook.
Exactly like that.
Right.
It could indicate a growing trend, you know? Public companies looking for alternative stores of value, maybe because they're worried about traditional fiat currencies.
Makes sense.
This isn't just about buying Bitcoin. It's a statement, really, a statement about its perceived long-term value in, the current economic climate.
It certainly makes you wonder if more companies are going to follow suit.
Okay.
Shifting gears slightly, potential new investment opportunities. Bitwise.
Yes, Bitwise. They've filed an S-1 form with the SEC.
Okay, for what?
For a spot NEAR protocol ETF.
NEAR ETF, right.
Right.
What's the big deal there? What's the significance?
Well, the filing itself, it's not just about making NEAR, the token, more accessible. It kind of reflects this increasing institutional confidence in layer one alternatives, alternatives to Ethereum.
Gotcha.
A spot ETF, if approved, would let traditional investors get exposure to NEAR without needing to deal with the tricky bits, like managing wallets, private keys, all that stuff.
Right. The stuff that scares off some people.
Exactly. So this could potentially channel, significant capital into the NEAR ecosystem. It would validate its tech, its use cases beyond just the existing crypto community.
So it's really about bridging that gap. Traditional finance meets the NEAR protocol.
That's a good way to put it.
But okay, if this ETF does get the green light, what should investors be thinking about?
Good question. While an ETF offers convenience, definitely investors really need to weigh the management fees that come with it against, the potential benefits of just holding NEAR directly.
So convenience versus cost and control.
Precisely. Does the ease of access, the regulation, does that outweigh potentially lower costs and having more direct control over your assets? It's a crucial question for anyone looking at this kind of investment vehicle.
Absolutely. Something to consider. Now, another major player making waves, SOL strategies.
Yes. SOL strategies. They recently acquired a pretty substantial chunk of Solana tokens.
How substantial?
122,524 SOL for about $20 million.
$20 million, okay.
And get this, this is just the first part of a much bigger plan. They're talking about a $500 million investment overall.
$500 million into Solana. Wow. What's their focus with all that capital?
Their stated goal is all about expanding staking operations and validator operations within the Solana ecosystem.
Okay, so staking, locking up tokens to help the network earn rewards, validators the ones processing transactions.
Exactly. So this isn't just passive holding, it's an active investment in the network's infrastructure itself.
Right. So how might this kind of big investment, this focus on staking and validators, how could that impact the Solana network and, the people already holding SOL?
Generally, increased staking activity. That enhances the security and stability of a proof-of-stake network like Solana. That's usually seen as a positive.
Makes sense. More security, better network.
And it can also potentially boost the returns for SOL holders who are already staking their tokens. But bigger picture, SOL strategies, putting down this much money, it signals really strong institutional confidence. Confidence in Solana's future growth, its tech capabilities, it's a clear vote of, well, financial support.
Definitely sounds encouraging for the Solana folks. All right, let's talk predictions now. Standard Chartered.
Yes, they've put out a rather, shall we say, bullish forecast for Binance's token, BNB.
How bullish.
They're suggesting it could reach $2,775
Wow, $2,775. By when?
by 2028.
Okay, that's ambitious.
Yeah.
What's driving that kind of optimism? What's their reasoning?
Their analysis seems based on a couple of key things. First, BNB's historical price correlation with the big two, Bitcoin and Ethereum.
Okay, so it tends to move with them.
To some extent, historically, yes. And second, their expectation that Binance, the exchange, will basically maintain its dominant position in the market.
Right. Well, that's a pretty huge target.
Yeah.
What factors should investors, keep in mind when they see these kinds of long-term price predictions for a major coin like BNB?
Yeah, it's absolutely essential to remember these are forecasts. They're not guarantees, not by a long shot.
Good point. Crystal ball stuff.
Exactly. While Standard Chartered's analysis looks at history, the crypto market is, well, inherently volatile. It's subject to so many unforeseen things, regulations popping up, new tech from competitors, just general shifts in market mood. All that can massively impact the price.
True.
And you have to ask, how much of BNB's future really is tied to Binance staying on top, maybe even unchallenged? That's a critical question to ponder.
A very important point indeed. Okay, let's move into our highlight reel. Quick hits on other key crypto news worth your attention. US Treasury Secretary Bessent.
Yes, she recently stated that the Federal Reserve should not issue a central bank digital currency, a CBDC.
Interesting. What's the thinking there? Why not?
Yeah, her stance is pretty clear. She seems to view a Fed-issued CBDC as something that could potentially stifle private sector innovation in digital currencies. Basically, she doesn't see a compelling need for one right now.
Okay. So what could be the implications of that position, for the broader crypto market, especially stablecoins?
Well, a clear signal from the Treasury against a Fed CBDC, that could be seen as positive for stablecoins.
How so?
It potentially gives them more room to grow, more room for innovation within that digital currency space. But, and this is important, you have to remember stablecoins are still very much under the regulatory microscope.
Right, not out of the woods yet. Okay, now, a significant move at the state level. New Hampshire.
Yes. New Hampshire has become the first U.S. state to actually pass a bill allowing its state treasurer to invest in Bitcoin and select other cryptocurrencies too.
Whoa, really? A U.S. state investing public funds in Bitcoin? That feels like a big step.
It really is. It's quite a landmark move towards mainstream adoption. For a state government to allocate public funds like that, it signifies a growing acceptance of these assets as, well, legitimate investment vehicles. It could definitely influence how other institutions view crypto.
Could New Hampshire's decision maybe create a domino effect? Could we see other states following suit?
It's certainly possible. New Hampshire's move, being the first, it could set a precedent. It might reduce the perceived regulatory risk for other states that might be thinking about similar steps.
And if more states jump in?
Increased institutional demand at the state level could indeed have a positive impact on price, on overall market sentiment for Bitcoin, and maybe others.
Definitely want to watch. Okay, switching to IPOs. The exchange eToro.
Right. eToro is reportedly aiming for a $4 billion valuation with its planned US IPO.
$4 billion. And they're trying to raise money, too.
Yep, aiming to raise $500 million, offering 10 million shares priced somewhere between $66 and $50 each.
So what does this signify? A major crypto platform like eToro going public in the U.S.
I think it indicates a maturing of the crypto industry. It signals greater integration with traditional financial markets. And potentially it could increase mainstream investor confidence in the whole sector.
Okay. But on the other hand, Florida.
Yeah, a different story in Florida. They've basically put the brakes on two bills.
What were the bills about?
They would have allowed public fund investments in Bitcoin, similar idea to New Hampshire, but they've been indefinitely withdrawn. The legislative session ended without them passing.
Huh. So New Hampshire says yes. Florida says not yet. What does this tell us about the regulatory picture?
It really just highlights how fragmented and, well, still evolving the whole regulatory landscape is for crypto, especially state by state in the US. Some are embracing it, others are much more cautious. It creates a complex, sometimes uncertain environment for investors.
No kidding. Meanwhile, over in Europe, 21 shares.
Yes, 21 Shares launched a new exchange-traded product, an ETP,
For which token?
for Crypto.com CRO token. It's now listed on Euronext Paris and Amsterdam.
So how does that help European investors?
Well, it gives them a regulated way, and maybe a more familiar way, to get exposure to CRO without needing to directly manage the token themselves, deal with wallets, exchanges, all that.
Easier access, basically.
Pretty much.
Okay, finally, Strike, Jack Mallers' Bitcoin payments app.
Yes, Strike is entering the crypto lending space.
Lending. How's that going to work?
They're going to offer 12-month loans backed by Bitcoin, starting at $75,000.
So you put up Bitcoin as collateral for a loan. What are the potential implications here?
It's an interesting development. Integrating Bitcoin into broader financial services, it could potentially offer Bitcoin holders a way to get capital without having to sell their Bitcoin.
Liquidity without selling.
Exactly. It might also add some liquidity to the Bitcoin market overall. But like any lending, especially crypto-backed lending, it's definitely a space that needs careful watching for potential risks.
For sure. Okay, wow, that was a lot. So let's try to quickly summarize.
Let's do it.
We're seeing big institutional moves, right? Metaplanet doubling down on Bitcoin, SOL strategies, making huge bets on Solana's infrastructure.
Definitely. And then increasing ways for more people to invest in altcoins, like the Bitwise NEAR ETF filing and the 21 Shares CRO ETP in Europe.
Right, more accessibility. But then you've got this mixed regulatory picture in the U.S., New Hampshire diving in, Florida pausing.
Really lighting that uncertainty, yeah.
And we're also seeing continued innovation into just like crypto finance itself.
Yeah.
eToro's IPO plans, Strike getting into Bitcoin-backed lending.
It really is fascinating when you step back how all these seemingly separate news items, they paint this picture of increasing convergence. Traditional finance and digital assets are getting closer.
Yeah.
You have established players, public companies embracing crypto, and meanwhile, the regulatory frameworks, they're slowly, maybe sometimes painfully, slowly but surely taking shape.
And that kind of brings us to a final thought for you, the listener. As traditional finance keeps engaging more with crypto, and these regulatory landscapes keep evolving, how do you see the future balance between centralized and decentralized finance? What new investment opportunities, what new strategies might emerge as this whole landscape continues to shift?
It's the big question, isn't it?
It really is. We'd love to hear your insights on all this. Head down to the comments. Let us know what you think stood out from today's deep dive.
Yeah, join the conversation.
And hey, if you found this valuable, if this helped you make sense of the noise, be sure to subscribe so you don't miss our next exploration into the world of eco-wealth.
Please do.
Until then, stay curious, keep learning.
And we'll catch you in the next one.